A sharp fall on Friday leads to Dalal Street snapping its 8-week winning streak. The Sensex and the Nifty end the week with minor cuts while the broader market sees some gains. On the Editors Roundtable, we'll tell you why Ultratech Cement remains the king of the cement ring, take stock of all the promoters' stake sales and tell you all about US presidential candidate Kamala Harris' view on trade and politics. I'm Sonia, with me, editors today Nigel, Prashant and Nimesh. Also on the show, we have with us Ashwini Agarwal, who is the founder and partner at Demeter Advisors. Ashwini, thanks a lot for joining in. It was an interesting week for the market, one where we hit that milestone of 25,000. Finally, and after that, the market sold off quite a bit.
A bit of a hangover, right,
Yes.
Sonia, after the 25,000. And for the first time, I mean, actually Friday, if you remember last Friday, we had that big 1.5% higher, 400-point rally on the Nifty. And we were talking about, well, where did that come out of? And this Friday is also eventful on the downside. But I think...
but it is today's fall, we know that it's because of global...
Because of global, but also it's interesting because it's one of the few falls which has not come back up, right?
Yeah.
Otherwise, by 10, 10:30, 11 o'clock, market is sort of shrugged off any weakness of any kind. But today it was down and I think it stayed lower.
Yeah.
So I think the question is, globally, are we now for the first time, I think in almost 2.5 years, because of the one market which matters is US, is the US also entering a bit of a risk-off phase?
Yeah.
And what impact can that have? Can we stay as absolutely insulated and Teflon coated if US starts to crack? I think, to my mind, that's the big question.
So even the geopolitical risk is something which needs to be taken into account, right? I mean, we've ignored for a very long time. Chris Wood was here and he very clearly said for him the biggest risk to the global equities right now is the geopolitical risk. And the way there are things shaping up in Iran and Iraq, there could be some further risk which can have an impact on all the economies, crude, commodities and everything, including dollar as well. So I guess that's also one need to keep in mind that we've rallied so hard, so no harm if you just give up some points and just digest all these gains and consolidate a bit. So I think that's the message from the market.
Talking about Chris, if you guys remember when he was here, he was talking about this was right before the budget.
Yes. 2 days before the budget.
And he said, well, if some tinkering happens on capital gains, it's going to be a big one.
Big one, yeah.
Right? It's not a big one. Nothing. And I read the note right after the budget for Chris Wood. And actually, he wrote it. He said,
surprised that, yeah,
absolutely incredible the strength that we're seeing in India. He's seeing it nowhere else.
Yeah,
and I think that is the other point as well. Sentiment globally has been starting to crack a little bit.
Yeah.
Except in India so far, so we'll see.
Well, that's right. On a day that the markets were down towards the end of the week, the new age theme suddenly came back to life. And all of them did very, very well. Zomato obviously reported very good numbers. But we saw the other names as well. Paytm, Delivery, all of them, they were up, I think, 5 to 7% in today's trading session as well. So the new age themes that underperformed for a bit, they made a big comeback.
Okay, made a big comeback. Well, Ashwini is with us, so let's get a view from him. Ashwini, thanks a lot for joining in. Everyone's asking the same question, right? Is this the real dip, the start of a real dip in the market? Because we haven't seen any major correction up until now. But if this is, what's your view? Should one go into this market with a buy on dips kind of philosophy? Should you raise cash levels? Are you cautious now? What's your view?
Thank you, Sonia, for this question. I was frankly very surprised by the strength of the rally over the last few weeks, especially after the budget. Capital gains taxes went up. You have had an earnings season, which is kind of ho-hum. It's, at best meet expectations. And in many cases, there have been disappointments. We've had a situation where geopolitics, as you people were discussing just prior to me, coming on, there's a geopolitical situation out there which can quickly go out of hand. And you have major markets in the world decidedly nervous for the last few days. So, when yesterday the market hit a new high, I was wondering that, what am I getting wrong? Why is the market so strong? So, in addition to that, there's a factor where I would call paper supply. I mean, this week itself, if you look at all the blocks that happened and the QIPs that have happened, something like $1.7, $1.8 billion has been raised. So, when you put it all together, the market's been very resilient in the face of a lot of negatives, and the negatives are now finally catching up. So to answer your question, I think I would brace for more downside. I think it's about time that the market took a breather. There are many sections of the market which are ridiculously expensive. And I hope we see some more correction as we go along.
If you guys remember, Naren, we spoke to Naren right after the day of the budget, and he explained it very nicely, very mildly. He said, I want a little bit more volatility.
Yeah.
Yeah.
He didn't say expect a little bit more prices to come off. He said, it's true, right? I mean, a normal market will go up, but it'll also intermittently come down. We've not had that. And I think a lot of fund managers have also been...
And the problem for a lot of the fund managers, they're sitting on so much of cash. They've raised the cash level.
Exactly.
They're a bit cautious as well, and markets are not falling, right? So I guess that's a bit of frustration as well among the investors that, hey, we've been looking for a correction. It's not happening for a while now. So.
Nimesh, but blocks, right? That is back and how, and it's going to come back even more
back
forcefully.
and how. Okay, so already we've seen, Prashant, blocks worth 5,000 crores in just last 1 week. Okay, today I'll just run through quickly the deals of this week. Today we saw a large block of 4% in NetWeb Technologies. Promoter sold 4%, and they've raised close to 450 crores. PNB Housing was a large block where Carlyle sold 13% of their 32% stake in PNB Housing, and they rose close to 2650 crore. The other small block was Route Mobile. Promoter sold 2%. But the other large block was RBL Bank, where again the private equity investors sold the entire almost 8% stake in RBL Bank, and they rose close to 1,080 crores. The other interesting block was Shobha Developers, where the Godrej family sold out almost 5% stake, and they raised close to 850 crores. So, while these are all reported deals which got done in this 1 week, I'm just going to run through some potential deals which can come very soon. And this again, what I've picked up from investment bankers and from sources, these are the few names where potentially large blocks can come. The first big block to watch would be Interglobe Aviation. We all know that the Ganwan family has been selling periodically. The 5-month lockup for the Ganwan family ends on, I think, 12th or 13th of August. Now, directly the Ganwals own close to 5.8%, but through the trust, they own another 13.5%. So nearly 19-20% is still left with the Ganwan family to sell in Interglobe Aviation. So that could be a large block. A second block could be Bharti Airtel. There's been a rumor for a very long time now that Singtel is looking to sell a large block. The Airtel results are on 5th. After that, potentially, you could see a large block there as well. The other big mover of this last 10-15 days has been Protein eGovern. A big move in that stock. Some large HNIs have bought as well. But remember, NSE owns close to 20% stake, and potentially they can sell another 15%, is what the sense from the market is. Five Star Finance, Kalyan Jewellers. Again, these are all where private equity are holders, and they could be potential sellers there. IEX could be an interesting name, right? I mean, for a long time, Dalmia Group has been owning close to 14.9% stake, and potentially they could also sell, given the fact that even IEX is rallied off late. Aptus Value Health, K Fintech, again, these are some large names, but the last few names would be interesting. Novama Wealth is an interesting name to watch out for. I understand Edelweiss lockup period ends in September, so after that, they could be potential sellers in Novama as well. And the big one is going to be Zomato, which has spoken the Deal Street Charter as well. Saw a big move in today's market, but again, Ant Investor is been a potential seller there. It could be a clean out trade. And again, it's largely owned by institutions, right? So there could be further large blocks in Zomato as well. So these are the few names where potentially large blocks can come. But the fact that the earnings season is coming to an end, it's very obvious that the August month is going to be quite hectic, and you'll potentially see very large blocks in the names that I mentioned earlier.
And is this a lot of the money going to come back, Nimesh? As we've discussed in the past, right? I mean, people sell, but that money then
exactly. So again,
gets right back
if the
here.
promoter is selling, then he will sell, and they will put money into his family office, and that money comes back into the equity market. So
and of course, I mean, if it's an investor, then either it goes back to the LP or it comes back, right?
Correct. But again, I think in a way it's good, right? I mean, I got some feedback that look at this way, that because there is so much of liquidity in the system, this kind of supply of paper will just absorb a bit of liquidity. So the overall market exuberance may just taper down a bit. So in a way, a lot of investors are happy as well that this supply of paper is coming in. I guess we should ask Ashwini. Ashwini, what's your view? You spoke about large block deals consuming a bit of liquidity. I just read out some large names there. Anything that's something that you'll be focusing on, like say aviation company or for that matter Zomato?
So, on these blocks, I think one will have to be tactical and see what's available at what prices and what are the alternatives available to us as an investor at that point in time. So I really can't give you an answer at this point. But to your broader point of paper supply, while you're right, it's good that investors are finding an exit and these shares are finding new hands. But at the same time, I would also say that at the end of the day, markets are about demand and supply. And I was running some numbers, and this is building up on what Ashish Gupta had done at Axis Mutual Fund and put it out in one of their mutual fund updates. if you take a very liberal view of, let's say, about 10% of total household financial savings flowing into equities directly and indirectly, which is via mutual funds and insurance policies and so on, you can expect something like a $70 billion inflow for the year, give or take, right? And this includes mutual fund SIPs and so on and so forth. And in the first quarter, we saw a total fundraising of roughly about $12 billion from the Indian corporates. This is new listings as well as offer for sale from existing investors and so on. And if you just look at the list you've drawn up, and you look at the pipeline of large issues that are about to hit the market, I think we are running at a much larger rate in Q2. So ultimately, the demand and supply is now tilting to a point where supply appears to be a little bit higher than where the demand is, and that should take some steam off the market, which is good in the long run.
Sure.
Nimish, that Novama block,
Yeah.
PAG owns 40%, right?
Edelweiss?
In Novama, PAG owns. So
Yes.
will Edelweiss look to sell the entire 13? Is that what you're hearing? Or
Like part of the demerger which happened and Nuvama got listed separately, Rashesh, the other promoter, and the Edelweiss group, they combined own close to 18-19%. Within that, the listed entity Edelweiss owns close to 13%. But there is a lockup of, I guess, a year or so. I think that lockup is getting over in September. So after that, there is a potential that maybe
possible, right?
Edelweiss will look to sell out and raise that money, because again, if you look at Edelweiss as a
they
group,
also exactly.
they're sitting on 6,000 crores of market cap, to 2,200 crores or almost 2,500 crores they can fetch from this particular block. So it'll add to the liquidity for the group.
Okay, well, Ultratech Cement has not only cemented itself as a top player in the industry, but has also managed to script a turnaround for most of the companies that it has acquired. Nigel, you've put together some data for us about the firm's stellar record and what lies ahead for the company.
Well, when the going gets tough, the tough get going, right? And that's precisely what Ultratech has done. So let's go across to the wall and tell you. And that picture really tells you the story. Ultratech Cement, they're not just the king of the cement ring, but also of swing. Now, in terms of the king of the ring, you'll guess right? Because of the kind of capacity they have. The swing factors, because they manage to turn around assets. So let's delve a little bit more into it. Now, if you look at it, in 2022, you had a new player that came into the cement industry. And everyone said, well, Ultratech's dominance is going to get challenged. And from there, in fact, we did have a few days when Ultratech Cement, the share price was under pressure. But after that, it bounced back. And among the top players, actually, the share price has close to have doubled from that time, from May 2022, when the Adani Group made its entry over there. Everyone said their capacity, their market share had moved up from 14 to around 23-24% odd. Their dominance will get challenged. And in fact, the stock could get derated. I'll tell you what, it is re-rated from there. Let's tell you why. They took the challenge to all the other players, because let's pull up the previous chart. In June 2022, they were at around 115 million tons. As of now, they're at around 150 million tons. This is the India capacity. And in the next few years, they've already charted this trajectory of around 209 million tons. You'll say, well, they moved this 35 million tons. Most of it will be inorganic, right? No, that's not the case. Most of this 35 million tons, in fact, was organic. 95% of this 35 million tons was organic. So it's not only inorganic that they did, but from here on, you'll also see the inorganic acquisitions that will come on stream. That's India Cements as well as Kesoram Industries. But even if you put that together, well, earlier out of their total capacity of around 115 million tons, 56% was acquired. Now that chart has swung around. As of now, close to 56% of the 150 million tons is organic. And even if you go ahead, they're adding roughly around 60 million tons, because they're going to go to around 209 million tons. Their capacity after that addition, well, 56% will still be organic. So they've done both a good blend of organic as well as inorganic. So I think you've got the picture as to why they're the king of the cement ring. Now let's tell you why, in fact, the swing factors work. Well, they acquired various assets over the few years. JP, Century, Binani, Kesoram, as well as India Cements. Now, these three assets, they were struggling because of the high debt in the books. But they managed to turn around those assets. And if you look at it at the time of acquisition, all these assets were struggling. JP was virtually shut and they were making losses. Century, well, that was more or less a family settlement, but that one as well, the profitability was much lower. And Binani as well was under severe leverage. And they managed to turn around the first three. Now we'll have to see how exactly do they scale up both these Kesoram as well as India Cements, because as we know, Ultratech Cement, they always do more than 1,000 rupees on a per ton basis. So the first three, they have been successful. The next two is something that we look forward to. How do they do that? The plant efficiency, the maintenance, the coal sourcing, the kind of kcal that they do source, and they've improved logistics as well. For cement, the important part is the lead distance. They have brought that down by close to around 50 kilometers in the last few years, and that results in serious savings. Also, if you look at it, in terms of coal sourcing, they have worked rather hard, and the dealer network as well, they have worked very, very hard. From, in fact, a push factor, they have moved to a pull factor. So put all this together, they managed to turn around. What's the way ahead from here on? India Cements and Kesoram, can they do what they've done in the previous assets? Both of them are predominantly in South India, and that industry is going to be under pressure. So the turnaround of this is going to be interesting. They'll be selling the non-core assets of India Cements. Mr. Srinivasan here on our channel had said they have 25,000 acres of land. Can they sell that? That's going to be important because as of now, they're sitting on a rather large debt in books. Also, the street believes there could be some other inorganic growth in store. Could you see Mangalam Cement? Could you see Orient Cement fold up? That's something we'll need to track. And besides all this acquisition noise in the capacity addition, they have said that they're going to reduce their own cost by 300 rupees per ton via various measures, changing the fuel mix, reducing the lead distance as well. So that's a crucial operational parameter that we'll be tracking as well. Going by everything, in the next 3 years, you'll have UltraTech Cement that will have close to around 27% market share, and an absolute capacity as well. They'll be closer around 70% higher than the nearest possible competitor. That's Adani Cement. So that's UltraTech Cement for you. Not just the king of the cement ring, well, they've also proved that they can turn or swing those assets around as well. Well, Ashwini, let's get your view on this. Cement names, everyone's looking forward to those mid and small caps. Everyone said they're undervalued. But one of the largest companies, or the largest company in India, which wasn't trading at very cheap valuations, they have proved they're the king of the industry. They have battled through this phase, and they are well placed. What's your view? Would you look at these larger names, or would you say some of those smaller companies, $50, $60 per ton, they could get gobbled up, so you'd rather play them?
So, Nigel, if you look at the cement industry in most other parts of the world, typically the top 2 players or 3 players have 70-80% of the market. And this is a business which doesn't really trade very well in terms of international trade in cement, obviously because of the freight cost. So the pricing is far more constructive in other parts of the world than it has been in India. The interesting part is, notwithstanding all the M&A that we have seen over the last decade, some of which outlined by you, and then, of course, we've seen others, the top 3 or 4 players still have roughly about 60% of the market. My sense is that the industry wants to consolidate further because that is what will give them the pricing power. And if you see what's happened in telecom, you see what's happened in aerospace, consolidation will lead to significant pricing power, and that will lead to a significant amount of gain. So you could play it either way. You could buy the large caps and benefit as they gain market share. And one of the interesting things is that whenever a business is gaining market share, the stock price tends to outperform. Or you could kind of narrow in and say, okay, this is the next one which will probably get gobbled up, and therefore, I'm buying it at $50 a ton. It will hopefully get acquired at $80, $100 a ton, and there's my upside. So you could play it both ways. The second part requires a lot more work and more patience. The first part is obviously much easier to do, which is buying the larger companies.
Okay, let's do one thing. Let's take a short commercial break on that note. On the other side of the break, we'll talk more about all the things that you need to watch out for in the week to come.